Hi, everyone. I'm DeFi Dad. This is episode 22 of Yield TV. All right, Kyle, welcome to Yield TV. Hi, everyone. So I'm DeFi Dad. Again, we'll be interviewing the co-founder of BZX today, Kyle Kistner. Kyle, how you doing?
I'm doing great. Thank you for having me, DeFi Dad.
Yeah, thanks so much for joining us. It's been an exciting summer, and it feels like we're starting to. It feels like the fall has just continued. We had a little bit of a drawdown there in the market, but I mean, nothing that didn't follow the stock market. And so, anyways, I'm excited to talk to you today about V2 of BZX. I wanted to learn what's the latest and greatest with BZX. You guys have a yield farming program that's ongoing, so we'll talk all about that, and also too want to just talk to you about your journey building as a founder, and of course would love to touch upon what BZX has done to ensure that funds are safe in smart contracts. So Kyle, maybe we should start with the obvious. Let's talk about your background. How did you get into the crypto space, and then when did you found BZX?
Yeah, so I first got into the crypto space around 2011. I had been kind of hanging around these security reverse engineering communities, and a lot of people were kind of plugged into the cypherpunk scene. And when Bitcoin and blockchain came out, they were quite plugged into it, so it became quite a topic of conversation online among the circles that I moved in. I got really excited about blockchain. I wasn't as excited about Bitcoin because I just didn't see how it would work as peer-to-peer electronic cash. But as time went on, colored coins kind of came into the picture, and this got me really excited. And eventually Ethereum kind of generalized all of that. And when I saw Ethereum, I got really excited, and I felt like this technology was super promising. I had been following Ethereum and blockchain throughout my time going in undergrad and graduate school. When I graduated, I decided, I saw that nobody had really created a decentralized margin lending platform. I had been looking at things like Bitfinex, and I saw there were very high yields there, like 40% APR, but I really thought it would be amazing if it could be done with the smart contract instead of with a centralized exchange. So when I got out of university, I pretty much was just reading blockchain stuff full time, getting myself really in the area. I was like a broke college kid at that point, but I was very passionate about the area, and I was reading all the white papers, and I eventually put together a little bit of money with some credit cards and started making some moves, and eventually, I was making a lot of good moves, and kind of like a syndicate of sorts sort of just sprung up around me wholesale, and I sort of fell ass backwards into that. And in that way, I made the capital that I needed to start BZX. And so I took that money, I rolled it over, and we me and Tom, we started BZX, and we started building it out.
Kyle, talk to me about, so what was the initial idea that led to founding BZX? I guess, what did you see missing in the crypto markets that you were excited to build?
I wanted to lend my money out for high APRs without the risk of an exchange hack. I wanted the code to be open source, fully transparent, auditable by everyone, including myself. So that was sort of one of the big priorities for me. I didn't really trust keeping my money on a centralized exchange, but I really wanted to earn 40% yields or whatever it was on Bitfinex at the time. They were very motivating. I was doing the math. I was like, wow, how much money would I need to live on 40% APR? Not very much. Somebody needs to make this for me to use. And so that was sort of the germ of the idea. It's like, wow, we're missing out on all these really great yields that we could have in a transparent and open way.
It's nuts too, because when you go back to when you guys started building BZX, this is a few years ago, and really DeFi is not DeFi yet. It's It's a bunch of different protocols being built. I mean, to tell someone that they would be able to lend assets they're already holding and earn something like 40% APY, I mean, that was a fantasy. And sometimes I think like we move so quickly in our space, like you have to step back and sort of appreciate like the fundamentals of what is possible here with peer-to-peer finance. Like this is already huge. We don't need to like have a new feature released every month. Like I am very happy myself, like using the example you said, earning something like 10 to 40%. It's been awesome the last year. While stock markets have, you know, they're back up, but I mean, it was pretty scary there for a while to watch them tank. So can you talk to me more then about around the time you found this, like what's the journey before you actually launch BZX? Because I like that timeline, there's a lot more building as I understand it in that timeline than since you've been live. And I think people need to understand like there's an intense amount of work that really goes into launching a protocol.
Yeah, for sure. So yeah, me and Tom started talking about it around July of 2017. Started kind of specking out what it would look like. It was a very iterative process. At the beginning, you know, I had never built anything on the blockchain before, and so I didn't really like have a great idea as to the design patterns. I had read, you know, all these white papers and had, you know, I saw things like 0x and I had inspiration to pull from, but it was extremely iterative because I kind of like propose these ideas and then it turned out that it wouldn't make any sense with the blockchain architecture. And then we'd have to kind of go and reiterate. But we eventually kind of like came out to this design that is pretty close to what you see for BZX today. So we ended up launching our contracts to the testnet in March of 2018. It ended up finished getting its first round of audits around September 2018. So it was like over a year going from sort of like the ideation to actually building the entire thing out. And you know, because of all the functionality we wanted to put into our protocol, we had, you know, like peer-to-peer loans and all of this other stuff. Yep. Like, you know, working with all of these different assets and plugged into other protocols. You know, it costs quite a chunk to audit, and it took quite a long time to develop for sure. It was definitely, you know, all of our auditors were always like, oh, wow, this is a big project.
So, Kyle, do you mind if I screen share just for a moment and show the actual platform? Do you want to just talk us through what's here? I think the goal, aside from like learning about founders and like their journey, I think one of the things I've always hoped with Yield TV is we could kind of show off the product. So can you talk us through the lending screen? And then I'd love to talk through the leverage tokens as well.
Yeah, for sure. So like, as you can see here, right now we're offering around 2% on Ethereum, which is very competitive for the overall market. You can very easily lend. You just like click it, put how much you want, hit it, submit it. You know, you'll get prompted by MetaMask, accept the MetaMask prompts and approve the token. So it said that you missed the MetaMask prompt there, I think.
Oh yeah. Sorry guys. Yeah, I did. I
don't know how far you're.
In case folks are wondering, yeah, just a reminder, Ether, it's one transaction, which is great. You can just send it and lend it. But with the ERC20 tokens you see here, you go through one approval transaction. So it will require 2 transactions in total. But I think the numbers to call out here that you're just referring to, like, you know, DAI at 11% and Ether at 2% is the one that really stands out. That's definitely a relatively high rate to be able to lend Ether.
Yeah, and I mean, even like 11% for DAI, that's much higher than a lot of alternatives right now. So the reason that our lending rates are so high is because we gave incentives, yield farming incentives to the borrowers. So they're kind of like willing to pay a little bit extra in terms of rates just because they're getting subsidized by the yield farming.
Can you talk to me about that a moment? How does the yield farming program work? Or actually, Kyle, I guess, do you want to touch on how leverage tokens work, and then we can talk about the yield farming?
Yeah, so if you go over to the trade page, you can see a price chart right here. There's a variety of different assets that you could choose. So, like for example, if you want to go long on Link, you want to go long on Maker, we're going to be adding some assets like Uni pretty soon that you can margin trade. You can see that it tells you your estimated yield. Right now, it's pretty high, 460%. And it's very easy. It's very easy to get into a position. You just hit buy on whether it's a long or a short position. You just hit your leverage, hit buy, say how much you want to get, and then boom, hit approve and send the transaction through. And there you go. If you want to go long on an asset, it's best to have that asset. If you will go short, it's best to have like DAI or stablecoin or something like that. Just more capital efficient.
The estimated yield here, this is based on
the BZRX price, by the way.
The BZRX. So this is, you're earning the BZRX token, and then this is estimated based on that market price of it. Makes sense.
Cool. So another thing to know about our program is that the rewards are vested. So there's a vesting schedule, which is around 3.5 years now. So you'll get the BZRX tokens, but they will be in a vesting contract, and they will slowly be dispersed to you. You can stake the tokens while they're still inside the vesting contract and earn fee sharing from them. So you can actually get like a constant source of revenue, but without the only downside is that it's difficult to just like sell it. So you can get the cash flows, but you can't necessarily extract all the yield from like selling it right away. You have to wait.
Let me pull up that staking dashboard too, because that's worth seeing here. Here we go. Oops. Let me reshare. I think this is it. Here we go. So you can stake BZRX, VBZRX, which is the vesting version of it, which is what you would be earning through the yield farming program. What is the vesting schedule for VBZRX?
Right. So it begins vesting on January 13th, and then vests continuously for 3.5 years subsequent to that.
Got it. Cool. So that's that's the schedule. Where would someone find all that information? Like, what should they be referring to? Is that
we have a staking FAQ on the website.
Oh, gotcha. Okay. There we
go. Definitely recommend checking that out.
Cool. All right. Yeah. Anything else here to share on the yield farming side, Kyle?
We also have a staking calculator where you can, if you go back to that page you're on at the very bottom, there was a link at the footer that says staking calculator. Super useful. You can kind of like figure out, okay, you know, how many, at the bottom.
Here we go.
Yeah. You know, you could say, okay, so for how many VBZRX am I going to stake? How much will I earn monthly, weekly, daily? You know, given you know, so much activity on the protocol. So you can kind of make estimates, or you can kind of, you know, you can configure it to be close to the current protocol activity, and then you can kind of see how much you'll be making by staking.
Cool.
BZRX.
Very cool. How about, Kyle, let's hop then to, since we've covered BZX as a platform then, so when someone uses a leverage token, how does that different from them opening a position on, let's say, like a perpetual market, like DYDX or MCDEX? What's the difference, and is there an advantage to using BZX?
Yeah. So like I would say the big difference between like basically like we are like we're true margin that operates on the spot market. The big difference between us and perpetuals is that perpetuals are basically like a two-sided bet that takes place outside of the market. So when you're dealing with a perpetual, you're not actually nobody's actually exchanging the assets. And so this kind of like brings up this issue that crops up with perpetuals, which is that, okay, that for every long you need a short, right? So how do you get equal amounts of shorts to come? Now, like maybe you think, oh, market will be efficient and it'll balance itself out. But it doesn't really. What you tend to find is that the longs will dominate the shorts. But what that means is that when the longs make money, they don't necessarily have a way to cash out if they don't have an equivalent amount of shorts. So what they do in the perpetuals market is they introduce this thing called a funding rate. This funding rate, if you go and you calculate it out, usually they're freaking enormous. So they're usually displayed like on an hourly basis. If you do the math and convert it into APR, you're paying like these super alarming rates. But basically, what's happening is, the shorts are having to be paid this enormous funding rate, basically because the shorts know that they're going to be paying for all the long's profits. So the big difference between the two is, like, I would say, like, look at the funding rates. We have direct access to liquidity. Liquidity that comes that you get for perpetual markets. There, it's having to go through maybe some market maker or something like that.
Yeah.
You're not going to get as great of rates, I'd say. Now, if you're somebody who's looking to short, as opposed to go long, I'd say like perpetuals are probably a better deal for you. And why? The reason is, you're getting paid to short those perpetuals, right? Whereas on our platform, you would actually be paying. But on the flip side, going long is much better on our platform because you're not going to be paying this enormous funding rate. And you'll be paying like just sort of like more sane borrowing rates, it's like, low single percent, maybe low double digits, but generally sane rates. So that's really where what it comes down to.
Is there a drawback to using a leverage token? Like, I guess what's the risk, or maybe like just what's hard about it, versus if I were to open up a position on a perpetuals market?
I wouldn't say there's like any like real drawbacks, like in terms of the price action. Some perpetuals markets are like more confusing than others. So there's like all these different varieties of them. There's like sort of like the inverse, and then there's there's like the vanilla. Like if you compare what like DYDX does, versus what we do in terms of like the leverage positions, the payout curves are basically the same. So like in terms of like how the token or the position moves in concert with the market, it's the same payout curves. So there's no real like different consideration that you take with that. But there's some, other kinds of perps that, pay out in different assets and therefore have like slightly different looking payout curves than like what, margin markets do, or like, what DYDX does or something like that.
I've definitely opened up like a 2x or 3x ETH leverage token before with you guys. And can you remind me, does the liquidation price for a leverage token, does that remain constant from the time I open it, or can that move at all? And if it does, I guess, why does it move? If you can just explain, like, what's the purpose of it?
Yeah. Okay. So in this latest version of B0x, by default, we're actually assigning base protocol positions. So every time you open up a position, you get your own custom liquidation price that kind of reflects the initial margin that you put in and all your initial loan parameters. In version 1 of Fulcrum, what we had were tokenized positions, and that's making a comeback. That's on our roadmap to integrate back into version 2. But we had these P tokens, and essentially what P tokens are they're pooled positions. So when one of them are open, it has all these load parameters and your initial margin and current margin and all of that go into defining what your liquidation price would be. Now anybody could hop in there, basically anybody could hop in there into this pooled position. And sometimes they'd be like inheriting a better liquidation price. Sometimes they'd be inheriting a worse liquidation price. There is definitely some quirky things about the P tokens in that regard that sometimes confuse people because it's pooled. It's all like they're all fungible ERC20s representing that position.
Right.
It would be sometimes a little bit confusing for people. They would like be getting in like at the same time that it was being liquidated, and they're like, what does that mean? What does it mean for it to liquidate at my entrance price? And like the answer was like, it actually didn't really mean anything. Liquidations like just lock in your profit or loss. So if you don't have any profit and loss, it didn't really affect you in any substantial way. But yeah, so in version 2, it's all individualized. One big advantage of the P tokens, we're looking forward to is integrating it with things like Balancer. So you can imagine very easily constructing like a leverage DeFi index portfolio or something like that.
Oh, that's cool. That's what I wanted to ask you about. As you were talking about this, I'm thinking like, man, like I'm surprised. Has it been mixed with anything yet? Have any of the leverage tokens been mixed? Because that would be really interesting.
Our leverage tokens have been surprisingly underutilized in terms of the money Lego usage of it. But, I will say, they were last up in February of this year. And, it's been a storm of DeFi building this year. So, I think if they were up, they would definitely see some use cases. Like indexes are finally taking off for once. Like I know Set Protocol, they had like, ETH BTC or, just like the bull or the bear, but like none of it was really like getting traction with people until they like put this DeFi index. And then people were finally like, okay, this is like a diversified basket of assets that like took some research to get that I'd like to get into. So we think that, like indexes are finally coming in, and that's sort of like where P tokens can really shine in constructing these like inverse and leveraged indexes.
Oh, that's a cool idea. Yeah, it's been really exciting to see indexes finally take hold. And I think that the DeFi Pulse one is the most interesting one to me. There's also PyDAO has a DeFi large cap and a DeFi small cap. PowerPool has something called a baby index. It's mostly like, I think it's like 6 or 7 larger, well-known like governance related tokens. And those are voted similar to PyDAO. So like the communities are actually voting the weights. The DeFi Pulse one, I can't remember. Do you know how the weights get decided on that? Like, I guess what I'm curious about is like, if someone is interested in building an index with leveraged exposure, that person can just join the PyDAO community or the index co-op. And I think that's where you would voice interest in this to get one of these leveraged tokens into the mix.
Yeah, exactly. So you'd have to use the governance process, or, you could even just, if you really wanted to, like, you'd be able to just spin it up yourself, just mint them in a balancer pool. And
just with a balancer pool. That's it's so cool. That's part of the reason DeFi is so exciting, is like, you just don't have to wait for someone's permission. Cool. That's so interesting to like think about. Definitely I hope someone creates that index with some leveraged exposure. Like I think the one that I'd be more interested in is shorting. Like I think that could be interesting. Then someone could buy it as a hedge against, some market downside versus like having to go in and open up equivalent positions in a perpetuals market. It'd be more interesting to me to have that sort of like, yeah, leveraged exposure on the downside, which is actually one of the use cases of your leverage tokens. Like that's what I bought some of it. Back in, I think it was in like January. Things were getting really hot, and I was like, "Oh, feels like we're gonna have a drawdown." And I remember whatever I bought, I wished I had bought more of because we did eventually see a drawdown. But oh well. Kyle, can I ask you more about what has BZX done since I don't even know how to label, is it a hack or is it an attack that happened in August, September? Like what has the team done since then to ensure that funds will be safe in smart contracts moving forward? Yeah, can you tell me more about that?
Yeah, well, we're making sure that the person who did it is accountable. We're, making sure that our bug bounty is super visible for people. We're making payouts to our bug bounty. We're publishing the payments that we're making. We're about to publish some new payments made. We really think that like the most important thing for protocol and its safety really is like a very vigorous and credible bug bounty program. We're also working with PeckShield to do real-time monitoring of the protocol. I think one of the most interesting defense mechanisms for a protocol is having having off-chain monitoring systems that can look at the mempool for incoming transactions that violate certain invariants and front running them with a transaction to pause the system.
Interesting. Yeah, we had Mariano a little while ago, Mariano Conti, and we were talking about the mempool some, and I realize it's probably not something any of us, other than those of you building a protocol, will be able to participate in. Kyle, the bug bounties you mentioned, how do those work? Like, can you explain some more about that? Just because I think like the average user doesn't realize like how important those bug bounties are.
Yeah, so if somebody finds some kind of issue with the smart contracts that could lead to a loss of funds or a loss of functionality in some way, they can bring it. So we have a bug bounty page. You can send it to our security email or contact the administrators via Discord or Telegram. Bring it to our attention, show us the proof of concept. Don't publish it on the mainnet. Don't demo it with the real transaction. Use a fork or mainnet, if anything, on Ganache, please, because there's, it's a dark forest out there. The moment you show us that you could exploit the contracts on mainnet, there's going to be like generalized front running bots and whatnot that are, and like just generalized arbitrage bots that just copy profitable transactions. So that's why it's like super worrying in that particular circumstance. So go ahead, check it out. There's these bug bounties. If you find it, come to us. We'll discuss it. We'll triage it, figure out the level of severity, consult other security experts to get some consensus around it. And then at that point, you get a payout for protecting the system and being a sort of a good citizen of Ethereum.
Kyle, talk to me more about what is V2 for BZX? Like what has changed, and like why have you all built V2? Like what's been the purpose of adding functionality or improving upon V1?
Yeah, so V2 was stripping down a lot of the functionality and a lot of the bloat that had kind of come with building since 2017 and having to make some pivots. So like the big pivot that we made was away from off-chain order objects towards more fully on-chain order books, especially like on the lending side. So there was a lot of kind of like overhead associated with that. We just stripped down the protocol. We made it over 50% more gas efficient. We also
Good.
added,
Yeah, that's a really good thing.
yeah, native support for Chi tokens. So like now it's so much more efficient. We took out, some features that we're adding, kind of more surface area. So before we had kind of pioneered like ENS loans. So if you just sent like your ETH to die.tokenloan.eth, you would immediately be in a loan. The ETH would be held as collateral. You would get DAI back, and it would just be done that simply. But it costs a ton of gas to do this, and so we noticed people weren't really using it, and so we took out the feature. So there's just a lot of things we kind of stripped down. We noticed what people were using and weren't. And then we just made it more efficient, and now we have some really exciting features that are coming, like so. And then of course we put in tokenomics that got people really excited. And then in the near future we have staking, the full DAO, and then what we're really excited about is permissionless listing, where you can use BZX kind of like the Uniswap of lending, trade, borrow, lend any asset you want. The trick behind all of this is really allowing BZRX token holders to stake to specific trading pairs to receive part of the trading revenue. So when they do this, they create a debt ceiling if it's a trading pair that's not already whitelisted. And so basically their tokens act as backstop collateral and progressively create more and more debt ceiling. And in exchange, they receive any of the trading fees generated from that pair that they're basically securing.
Kyle, I'm curious more generally, what do you think is missing in the DeFi market right now? And wondering also if there's anything there that BZX might build in the future. But like, what do we need in order for more users to start using DeFi?
What do we need for more users to start using DeFi? Yeah, indeed. Sort of the $1 million question, right?
Tell me the secrets. Yeah.
Like, I mean, it's so interesting because like, we just had this latest like sort of bonanza, and it feels like even though DeFi has grown by 10 times in dollar amounts, it doesn't really feel like we've really grown in the way that we need to grow. Like this last growth cycle has basically been capital from existing blockchain projects, lots of layer one stuff getting sort of reshuffled in to what is the more productive parts of the industry, DeFi. But we still haven't really cracked the code as to how to make these products or these functionalities useful for like retail people, the average person. So it's not clear to me where the route forward is on all of that. Like fundamentally, what we're building, lending, trading, borrowing, like our customers are overwhelmingly people who are like gamblers and traders. And until it changes and there's businesses that are servicing more than just gamblers and traders, then we're not gonna break out into the mainstream. But like basically, I feel like the question of like how do we get DeFi mainstream is like very, very closely, is just very closely related to the question of how do you get crypto mainstream? How do you get people into the ecosystem, caring about it, speculating on the assets and all of that? So I don't really know. One thing I do know is that at this current moment, DeFi is one of the world's greatest casinos, super fair and transparent. And at very least that has some retail appeal. So
I wonder too if the answer is just that like we're going to see more of these more retail friendly applications get built. Like, for example, if I am going to benefit from the DAI lending rate that you have, if I'm using, I'm trying to remember actually what is the name of it. I was trying to look it up here on my own page here. Oh, yield bouncer. Gosh, I forgot the name of it. If I'm using a yield bouncer and it's bouncing my DAI to different protocols, well, like suddenly now I'm getting exposure to BZX, to Compound, to Aave, DYDX, whoever. Like my goal is to benefit from like where's there the best yield. And that to me is a really simple use case. You know, I like it goes back to really what you talked about with launching BZX, which is, you know, folks being able to lend their money and be able to earn like a better return. I mean, it really, to me, like that's a huge use case that like we need to find more people to take advantage of that versus like coming out with more and more iterations of DeFi mechanisms. It's like that right there is a killer use case that more of the world could benefit from. So sorry, Kyle, what were you saying?
No, I mean, it's absolutely true. And at the same time, you know, like I see all these different businesses that are kind of built out on this premise. So there's like Linen, Dharma. There's quite a few that like basically have this premise of like, hey, DeFi has yields. Let's go and bring these yields to the people. And I guess I always looked at these businesses and I just had big question marks over my head because I felt like you could do that, but the liquidity and the liquidity on the lending side is just really not that great. So like, you know, at this point it does seem like, you know, you could bring in tens of millions, which is a big step upwards from where we were at back when you know it was in February or something like that, and you know like the biggest protocol was $100 million. We definitely, you know, gotten bigger, but I still am not sure I see like the business proposition in all these, like, you know, bringing DeFi yields to people for 10% type businesses, just because it seems like the moment you actually get people in, then all the yields just sort of disappear. Like we've just not really like matured or got into the size where we can actually like withstand retail people coming in while maintaining our value proposition.
Yeah. By the way, I've got a few questions here from folks watching. Webby was asking, in light of recent events, is the lending a simple lend or is it a looped reward contract? I don't understand what that means, but hopefully you can answer that.
It's a simple lend. It's not like an SNX rewards contract or anything like that. It's nothing complicated. Interest comes in, you get paid.
Awesome. And there was a question about your TVL on DeFi Pulse. Is it a bug or I'm not aware of this, but whatever they're alluding to, I guess, like, is your TVL accurate on DeFi Pulse is what I think they mean to ask.
It's not accurate on DeFi Pulse. It's accurate on DBank right now. So check them out. They have it. The numbers on DeFi Pulse, it's in staging right now. So they're close to merging it and having it fixed on their end.
Good. I can attest to the fact that from a Zapper side, it takes a lot of work to continually keep these contracts updated. And so, yeah, I can attest to the fact, like, the utility, of course, of using like a DeFi Pulse or a DBank or a Zapper, you know, it seems so simple as a user, but it's just overwhelming the amount of contracts to keep up with. So that's great to know, though, that that'll be updated soon. What is current TVL, Kyle, based on the real numbers on chain?
Based on real numbers on chain, right now we're at around 14 million.
14. Oh, wow. Oh, okay. Oh, wow. That is a big difference. Okay. Yeah. So, well, I'll look forward to the update there on.
We were up to 25 million when our yield farming program was kind of like in full swing, but we've cut back on the rewards. Some of the TVL has sort of bled, but not too much of it. So we're pretty happy with the TVL numbers all in all.
Yeah. Okay. Wow. Yeah, that's a much larger number than what was showing on DeFi Pulse. So glad we clarified that. Kyle, I want to make sure we don't keep you over time. So just had a few more questions for you. I'm always curious, as someone like you're one of the very few people in the world who's built a protocol, who's building for DeFi. What is another team that you admire, or what's another team that like, let's pretend that BZX didn't exist anymore, and you could join any team you wanted. What's a team that you would love to work with?
I guess DYDX. They're pretty good. They're pretty good.
DYDX, yeah. That's an impressive team.
It's too bad they have to be competitors. It's like, man, why can't my competitors be worse?
or unlikable too. Yeah. They're like really they're too nice.
They're good dudes doing good work for sure.
Yeah, definitely. One more question for you. What's something you wish more understood about well, it could be about BZX, but I guess also I'm curious, like, what's something you wish more of the world understood about DeFi, as we like continue to work towards more people participating and hence more adoption?
I guess I would want people to understand like the essential value proposition of having a true digital commons. And I think people just really just don't appreciate that fundamental building block of like being able to build on somebody else's thing and not having to worry about it changing from underneath you. Like, people do not like value this property as much as they should. It's the whole composability thing, but like it really gets to the core value prop of like why what we're doing is different from what else exists out there. And it's why you see the kind of like weird, wacky, taped together Rube Goldberg machine type applications in this area you don't see anywhere else. So that's what I'd like people to realize, that what we're doing is different, and that's why.
You reminded me of something significant I missed, which is what has it been like transitioning to a DAO? Like, what's it like to move from? I think that coincides with what we're calling V2, right? That's launching the BZRX token and going from what I knew as like a core team to being a core team that operates according to what the community is communicating.
It's been a great relief. I'll say.
Good. Yeah.
Like the more the community takes hold and makes decisions, the less like really heat or flack we have to take for any of our decisions. So the diffusion of responsibility is definitely a feature, not a bug. For these DAOs, and we really look forward to having the community be increasingly engaged. We've noticed that as we've put out the tools for the community to engage, they've seized on those tools and they're using it, and they're like really developing their own opinions. They're developing their own leaders and figures in the community, and that's really exciting to kind of see. Like before you fully go DAO, you need to have like sort of the motions established. And so we've really gotten into the motions of what it's like to be a DAO, to make decisions as a community. So when we actually do give it to the community, we're able to actually function like a decentralized community, as opposed to just some like decentralization kabuki theater.
Yeah. I am always blown away by hopping into a Discord. I participate at times in the BZX Discord, and every community has folks who like really have just been someone with lots of good ideas, and they speak up and they continue to reiterate their ideas. And so I guess what I'm trying to say is there's little friction to participating in DeFi protocols. And I think that's one of the coolest things, that someone can get involved very easily just by like I guess being a little brave and speaking out in Discord. Kyle, so that's really it, I guess, for us today. Just thanks so much for your time. I want to make sure I remind everyone, though, that they can learn more about BZX at bzx.network. That's where they'll find Torque and Fulcrum, the borrowing versus lending and trading platform that's built on BZX, the protocol. They can follow you here on Twitter. And then also be sure to follow the BZX Twitter account as well, which is, gosh, I'm forgetting what's the handle, Kyle. It's BZXHQ. Is that it?
At BZXHQ, indeed.
Cool. Anything else you'd like to share before we go, or do you feel like we covered everything today?
Thank you very much for having me, DeFi Dad. Really enjoyed being on the show. Hope you guys got something out of it. And would happy to come again.
Yeah. Thanks so much, Kyle. Always great to catch up. And congrats on V2. And I did not realize you were up to 14 million in TVL. That is a number to be proud of. And just indicative of where we are in the market. Like it's been really cool to see. TVL has been holding since this drawdown, which is like the drawdown in DeFi and crypto coincided with the stock market. So when I see TVL holding, especially amount of ETH in our space, I'm like, that is a hell of a good sign, like.
Same way. I feel the same way. I mean, it makes me feel like the bull run is just on pause.
Absolutely. Yeah, absolutely. Consolidate and continue upwards. So, well, thanks so much, Kyle. And everyone, please tune in tomorrow. We will have, actually, I think we'll be holding Yield TV tomorrow. Yeah, looks like I almost forgot about the fact we booked Diane from Dodo. So we'll be talking with her tomorrow. And you can watch this full episode on tv.zapper.fi. So thanks so much, everyone. Have a great day. We'll see you next time.